Hello everybody, I hope that you are doing very well and welcome to today's cryptocurrency technical analysis where we will be together jumping into the Bitcoin chart, going over what in my opinion now does look like a very bullish chart. We are starting to break some key resistance levels and how we can envision this to push to the upside in terms of the next targets to the upside. I'd also like to be going over how we can manage the trade that we're in right now. The psychology and the importance of having a plan, and then we'll end with the target. So it'll kind of be in that proceedings. We'll start with a review of yesterday's trade, then we'll go over the importance of a plan, and then we'll end with the targets of the current move. So I hope that you enjoyed this. I really hope that you can learn something from it. And let's get into the charts. So to begin with here, there's obviously a few key factors, few key things that I want to start with. And I want to start off with yesterday. Okay, so I actually want to review the price action and why it's so important to initially have that plan, but then be able to react to the market and not get stuck with a bias. Because, you know, now in my opinion, this is a really bullish looking chart. So what happened? Why did my perspective change? As you'll know from yesterday, I was anyway, taking shorts from $38,000 to $38,200, which is obviously our weekly. We had our weekly there coming in at $38,200. We approached this level, we came up with our bearish divergences, and we obviously started to see this pullback. Why did price bounce from where it did? Well, we were looking at this yesterday. We obviously came back into our support trend line, we came back into the CC, and we also had bullish divergences. So we go from a case of having bearish divergences up here to getting bullish divergences down here. How did I manage my original short? Obviously took profit 1 at the first low, took profit 2 at this low, where I did close the majority of my short position. What I then wanted was a rise in price to actually basically add to my short position to ultimately try and trade it back down. Obviously, in the end, that's definitely not the case. I'm fully out of my shorts, and I want to explain now why that is the case. But it's actually to do with this trend line, this resistance line that we had here. As we know that this is what we were looking at in the stream as a potential resistance that was coming in at 37,720 more or less. And this is what I like to say. I'll give my urgent updates over on Instagram, where you'll know yesterday I was talking about, this was after the live stream had ended. I was talking about, you know, this actually is a really bullish bounce. And the reason why I was looking at it so bullishly is because we cleared that trend line and we started to hold it as support. Again, that's obviously one we were pretty aware of during the stream. So, okay, this is actually a pretty bullish bounce in my opinion now. And so it's removing the ego, because if I had an ego and I said, right, I'm shorting this, I'm not going to change my mind, that's set in stone, I'm not going to react, then obviously you're going to get burnt. But I had enough intuition here to at least say, you know, I'm actually wrong on this short idea now. I fully felt I was wrong on the idea. And that's why I wanted to do that urgent update 9 hours ago, telling you, I have now closed the short and I've in fact longed Bitcoin. And as you know, that was about $37,706. Really simply off of the flip on this exact candle. We flipped that and I was like, okay, actually, I don't want to be in this short anymore. I can see the signs of strength here. So it goes from having an original plan, which was my short up here, to obviously taking profits. That's a massively important thing. So the update in the next slide. And that's why we trade the charts, because from recognizing, okay, it's not actually so good to be in the short anymore, we're then hitting 38,300. Well, that was 8 hours ago. Now we're obviously at coming on $40,000. So it's important to, I want to just highlight here, it's important to, let's just write it out. So I am aware that we're moving up right now, but just so you are aware, I am feeling pretty bullish right now. So we'll get to this in a second, but I just want to help you all with a few pointers here of things to bear in mind. So what we can say is, how does one have an edge? So what do we mean by an edge? An edge in the market is something that you can rely on to give you a statistical edge over time. So in trading, we acknowledge that price can go up, down, or sideways. Price is going to do one of 3 things all the time. And what we can say is we have to use our edge to give us a probabilistic edge in our favor. So we're not trading random results. We're not just trading, I'm just going to randomly long, I'm just going to randomly short. No, what we're saying is we have built up statistics over time that will say to us, price is most probably going to do this. But what we always, I just love to stress this point, that we never have that 100%, because trading is at the end of the day a random result. The next trade is always a random result. We can never ever say with 100% certainty what price is going to do. That's why we have to be prepared for a bullish and a bearish scenario at all times. And then what we will do is trade what we feel is the most probable. So where we're going with this is obviously when we were down, when yesterday we were up at 38,200, I felt it was most probable we got a decline. While we were down at the lows there, I still felt it was most probable that we got a rise and another decline. But where I started to feel my probabilities had changed, and it was no longer likely that we were going to get a decline, is really simply when we actually started to hold that resistance back as support. Okay, then obviously we get through 38,000, we get through 38,200, and there was then 0.000 need to be in a short. But you know, it's kind of this point of how does one have an edge? Well, firstly, they have to trade and record statistics. So, you know, get a trading journal, write it down in an Excel file, you know, record the types of trades that you're taking. Again, this is not for everybody, but this is something I enjoy to do. And then you, from recording statistics, you know, from recording the data, you have statistics, and then from those statistics, you start to form an edge. You'll start to say, okay, I want to take this trade, I don't want to take this trade. When I lose a trade, you know, how can I improve it to, you know, increase those probabilities once again? So yeah, that's obviously the first thing that's really important to recognize. You have to have a plan. So how, you know, you have an edge in trading from firstly trading, you know, firstly trading and getting the experience, then it's recording statistics, then it's, you know, from those statistics forming a strategy, and then from having the strategy, it's sticking to the plan. So it is, you know, formulating a plan and sticking to the plan, recognizing where you're wrong. Okay, so from having a plan, it also means knowing where you're wrong on the trade, because I just want to emphasize once more, if I had shorted here, not taken any profits, and held my short on to now, obviously I'm going to be absolutely wrecked, because I would have essentially traded with no plan. I wouldn't have known where to take profits. I wouldn't have known where to place a stop loss. I would have just shorted and hoped for the best, which is obviously a plan that never, ever, never is going to work consistently. So I wanted to just start off this section with giving you a bit of an overview of why it's important to have that plan and why it's important to react to the charts and not trade what we want. Okay, so we don't trade what we want. We don't trade, and you know, we don't trade our beliefs, but we actually have to trade the charts. So when the chart is telling us to long, long. When the chart is telling us to short, short. It's as simple as that. It doesn't matter what we want. We got to trade what the chart is essentially telling us. At the moment, it's really telling us that it wants to push up. When we look at the volume here, we obviously were looking at this yesterday. Now, I was totally surprised. Okay, because I have a lot of experience trading Bitcoin, and generally speaking, when I see this much volume come in, it does end in a, you know, essentially the first bounce won't work and you'll get another dip before an increase, and that did not happen yesterday. So this for me was a unique move because of the fact we had so many longs opening on the first dip and price literally just kept going up. So this is the question, is this the institutions buying? That obviously we don't know, but what we do know is there was hundreds of millions of dollars of Bitcoin bought yesterday on that dip. So somebody was buying hundreds of millions of Bitcoin, which is obviously, yeah, that's pretty bullish when you just simply take that at face value. That's pretty bullish if someone's buying 100 million Bitcoin, but somebody has. And that's what we can see from this volume. And that's partly another reason why, okay, I was thinking we might get the second dip, but then when we had reclaimed resistance as support, thinking to myself, right, you know, this actually is a lot more bullish than what I anticipated, and price makes its way back up. So that makes it come up to where we are right now on the Bitcoin chart then. So we are 8:13 in the morning. It's very early for me. I just felt compelled to make this video. So where are we looking at now in terms of our next support and resistances? So if we just clear the chart right now, let's come up to the daily. Actually, let's stick on the 4-hour chart. We don't need to be on the daily. We actually have next, in my opinion, a key resistance of support. Support and resistance. So what we're going to do is we're going to take our Fibonacci from the high of the move down to the low. And we have now, well, we have this next region of resistance. And that's really coming in from $40,000 to, you know, this key level here, in my opinion, which is basically $40,580. So let's just say $40,600. So we have that 40,500 to 40,600 where you have another potential short position here. Actually, I'd arguably say it's 40,200 to 40,600. So you have about a $400 region, which in terms of the price levels we're at now is a very small percent. But That's the next region, in my opinion, where I would be cautious. So there's one thing that I want to highlight here of how I trade. As you will know, back on the 27th of January, we were very, very bullish and buying Bitcoin down here because we were at support. And the way that I approach trading is when we reach our support zone, I am really, really bullish because what's happening down here, if you remember on the 27th, everybody was really bearish. You know, a lot of people were looking at the death cross. A lot of people were saying $27,000, $20,000, which is fine. You know, maybe they had a plan and they had a stop loss and they moved on to the next trade when they saw the strength. But nevertheless, this was an area where I was buying each of the dips. 30k bought the dip, 30k bought the dip, 29,600 bought the dip. So if that was support where we were happy to be bullish, well, now we're coming up into resistance. Should we be happy to be bearish? Well, the way that I approach trading is yes. I acknowledge I can have a plan here that says, okay, I knew to get out my shorts here, but can I approach a new short position here? The answer is obviously going to be yes, because I'm happy to be bullish at the lows and I'm happy to be cautious at least at the highs. So would I randomly long here out of FOMO? Obviously not. Where could I say I could get into a potential nice short position with an invalidation which I feel has to be above this high and look to potentially, I could potentially trade this down to maybe just $36,000. If you get into a short from $40,000 to $36,000, that's a $4,000 move. So that's a pretty nice short position. Where could we say, right, where am I right and where am I wrong? Well, where are you wrong? I feel totally honestly, Phil, if we go back above, 40,300, that's, in my opinion, that would be pretty bullish. Well, actually really bullish. I would 100% not short it. And I would be looking up towards $50,000, $60,000. So that obviously offers a really nice breakout trade. But there's no, to get a breakout trade, you need to break the highs. This isn't a breakout trade here, is it? Before the highs, this is actually an area, in my opinion, to be cautious. Although, yes, it looks really bullish. I'd prefer to be cautious in this zone, be interested in short positions, because I'm risking a stop loss of like 1%, and the potential downside is really great. What I can then do is potentially take a short here. If it clears the highs, close the short and take a long position. That's the way that I would approach this. Although, yes, as it stands right now, I'm not in a short, and I feel that this is pretty bullish in my opinion at the moment. But nevertheless, I'm still happy to be cautious at this level. I'm not just going to randomly long. I'm not just going to randomly short either, excuse me. But I am going to approach this in a way of saying, okay, we're up at my resistance region. I'm happy to be cautious here. I'm happy to look for shorts. Maybe I'd like to wait for a step of confirmation, but nevertheless, when I'm down at the low of my range, I look for longs. When I'm up at the higher range, I'm going to look for shorts. If we break the highs, I can really simply take a long. So that's kind of the way that I approach this. I must stress this video has no financial advice. I'm not telling you how to trade. I'm not giving you any advice at all. No advice. This is the way that I approach trading. So this is here. You're here for my opinion, my perspective on the markets in a very, hopefully non-emotional, my opinions are not driven by emotions. My opinions are simply, like I'm saying here, trading the charts. So I trade what the chart is telling me, not what I want, not non-emotional, just really simply trading the charts. So I think that this is the way that I'm approaching it. So just a summary here. How long have we been going? Well, 13 minutes. Yeah, already too long. I didn't want it to go on this long already. So really simply, I've hopefully given you a perspective in this video, which is, I think the biggest takeaway here has to be that you have to trade your chart. You have to have that plan. You have to know what you're looking for and why you're looking for it. Because if you don't know why you're looking for something, then you're essentially gambling. And you can fall into the category of being a gambler in the markets if you're not trading off of a statistical edge. Like we say, that we are the casino. So if we're the casino owners, obviously at times when we're pulling, let's say we're the casino owner and we own the slot machines. Obviously, statistically speaking, we are going to be, as the casino, taking the majority of the money on the slot machines. But there are times where the other person wins and they take the jackpot. But statistically speaking, over time, we're going to be winning a lot more than we lose. And the same as in trading. We are going to be winning a lot more than we lose off of our statistical edges. But there are going to be times where we lose, which is fine. That's why we have a stop loss and an invalidation. And we'll move on to the next trade, or we'll move on to the next stop ball, because statistically speaking, we as the casino owners know that we win more than we lose over time. And that's the way that we approach trading. We're going to know each result is a random outcome, but statistically speaking, but statistically speaking, over time, we can say we have a higher probability of seeing this play out than this. And it's as simple as that, in my opinion, of approaching trading. It's really not emotional. You know, you don't feel any emotions. You don't feel euphoric when it's pumping. You don't feel, you know, ultra bearish and fearful when it's dropping. I think I try and flip it and try and get bullish when it's dropping and bearish when it's rising. But obviously, there's a time and a place to be each. Sometimes when it's rising, you can be really bullish, and sometimes when it's dropping, you can be really bearish. Obviously, market conditions do prevail. So yeah, to summarize this, I really do hope this has been helpful. I haven't wasted my time here. I truly hope I've been able to help somebody. So yeah, my summary here basically is I am now out of all shorts. Really simply, I think that we are coming up to a resistance region, and that really is from 40,200 to 40,600. This is a place where I'll be cautious. I don't have any shorts preset, but I will be open to shorting this. Okay, if we break through that resistance, personally, I will be trying to trade a breakout long, and I could imagine this pushing $50,000-$60,000 over the next few weeks if that's the case. Alternatively, we reject at those highs. I'll be looking down to around 36,000. That's probably my first sort of target region. Well, 36,660. You know, that key daily level that we had. So yeah, that's the way that I'm approaching the market today. That's my perspectives. I truly hope that I've been able to help somebody. I suppose this is the thing with the altcoins. You know, Bitcoin up 3%. You're seeing the altcoins down, some of them down 10% today. So this is why I think altcoins just have to be so kept. This is why I just personally love to focus on Bitcoin. Well, Bitcoin and Ethereum, they're kind of the only two things I trade, and I'm pretty content with this. But yeah, nevertheless, I hope that you've enjoyed this video. Hopefully it's offered you a bit of a different perspective of the charts. Yeah, and I truly hope that you've enjoyed and learned something. So without further said, thank you ever so much. That's me signing off, and I'll catch you in the next video. Cheers and have a brilliant day. Thank you.